Very quiet markets yesterday with Hangman on our broad market index candlestick charts. Today, of course, there is a reason for that Hangman. That is because we have Janet Yellen, chairman of the Fed, speaking before Congress. So, what gives? What comes next? Well, this is Stephen Harris, the head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:49 a.m. Central Time, and I'm recording this in preparation for the market day of February the 24th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, where does all this go? Likely we're going to see the market stay relatively flat until her testimony has cleared, and then perhaps more volatility in the afterworks of that testimony. So, let's see what the overnight markets were doing. Indeed, look at this. All four broad market indices essentially sitting right on their closes of yesterday, and the close yesterday was right on the open of yesterday. So we had dojis or hangman hammers on many of the broad market indices. Really, obviously, an indecision, and indecision at all-time highs is something of a warning flag. Obviously, for a hangman to be a true reversal, you have to have a bearish confirmation, and that will have to come in the next day or so, including today. So, crude oil, a bit of a bounce, up 0.5%. Our other markets a little bit weaker, with gold down 0.43%. Really nothing in any of these markets to get terribly excited about. In terms of our overseas markets, China again up, and this time up 0.76. We have Hong Kong down a little bit, Japan up almost like China, and then Germany and the United Kingdom both are essentially scratch at the time that this snapshot was taken. In terms of macroeconomic reports, the biggie, of course, is Janet Yellen. Here you see red flag report. Fed Chair Yellen testifies before Congress. That will start, I understand, at 10 a.m. Eastern Time. You also have a few other reports: mortgage delinquencies, an orange flag report, Richmond manufacturing yellow report, consumer confidence, that is a red flag report. So a number of different things coming, but really the real mover is going to likely be Janet Yellen. The rest of this will be background noise. In terms of tomorrow, we will have crude oil inventories, of course, new home sales. Yellen continues. That would be pretty much it for tomorrow. And let's go and see if there's anything shaken on our volatility. I would expect no. Indeed, short-term volatility 12.16. Implied IV percentiles all very, very low across all four indices. And also our number of standard deviation days and recent trading days across the four broad market indices all, again, very, very, very low. With the S&P here in the first column, we've now gone about a week and a half since we've had a significant moving day in the S&P. So probably due for some volatility to come back. In terms of our regular daily report, do note if you're a bond trader, bonds do roll over later this week. Really not a lot of changes. This should be a relatively simple broadcast today. We're still phase 3, looking for higher highs and higher lows. We're still confirmed uptrend. GMI index 6 out of 6, so very strong bull signals there for investor posture. Active trader posture is also very, very bullish. Our position sizing models all point to 100% of full position for the initiation of new trades. From a market timing standpoint, we do have neutral for 1 day and 3 day. Really short term probably over bought and could be set for a pullback at any time, and yet at the same time, with news coming in validating the market that interest rates aren't going to do anything in particular, these kinds of things from Janet Yellen, you could also see a stimulus to take another leg up. Our short-term and intermediate-term market postures on all four indices are frankly banging away, nearly 100 across all four of these. If anything, it has room to come down. Hedge warning status currently is threshold level 0. Volatility metrics are all good. You notice distribution days continue to fall. Now only 3 distribution day count on the S&P 500 and 2 on the NASDAQ. And really, everything looks to be in very, very good shape. On our intermarket risk aversion indicators, you might have evidence of rolling over on 3 of our 5 indicators. So that might be some early warning sign, but they've not actually rolled over yet. They've not pointed to risk off quite yet, but could be priming the pump for some at least pullback. VIX is back inside the acceptable window, so option income strategies are a go. Covered call strategies, looking for equal distribution between in the money and out of the money strikes. And our opinion on put selling, absolutely acceptable to sell puts in this current market environment against a core portfolio basket of stocks that you are willing to own. And let's drop down here to some of the other charts that change on a daily basis. Sector market posture, pretty strong. Do note the telecom has lost a little bit of its luster. Both in the short and intermediate term have dropped into a market posture neutral. And of course, energy and utilities continue to be weaker than others. From a percent change, healthcare had a big day yesterday, up over 1%. Industrials as well. Financials coming in third. Energy was the weak one, and you notice utilities continues to be in relative terms much weaker. And our top industry groups continue to be retail, railroads, transportation, internet, and healthcare. Focus your time and energy on those industry groups. And perhaps when you look at healthcare, look specifically at biotech. Okay? So, where are we? We are at that point where I say thank you very much for favoriting us or liking us on your favorite social media platform, especially on YouTube, right where you're listening to us. If you will hit that liked thumbs up, we greatly appreciate it. And then, as always, email questions or comments to support@falconglobaltraders.com. More information available at the website, including information about the free trials for each of the 3 live trading rooms. Disclaimers as always. Hit pause so that you have more time to read this. And then we greatly appreciate you each and every day in the Falcon Global Trading community. Good trading and goodbye.